Um, we're going to be looking at past questions today on published financial statements. We're going to be considering November 2024 for today. So, what I want to discuss today is typically what you might find in your question one in the exam, or it could be cash flow, or maybe even ratio. It's part of, they are all part of published financial statement. But like last diet, the question one, which is May 2025, was cash flow. When I teach you guys cash flow, definitely solve that question. Cash flow is something that also comes out every year. But for today, this one came out in November 2024, and it was the question one, and it was 30 marks. That diet. And in the exam, a 30 marks question, you're expected to spend 54 minutes to solve it. So you have roughly 50 minutes to solve this question in the exam, which I believe by the time we are done with this published, because my target is to always solve like 5 questions or worst case 4 with you, you should be comfortable in solving anyone that they bring for you in the exam. So usually, the examiner will give us a trial balance. It will give us a trial balance. And when I find a trial balance, the first thing I always look at is, did they balance? Because if they don't, it's going to affect my balances. Secondly, I might scan through these items. Just scan through. I won't take so much time. And for me, I've already looked at these first 3 items. I know that they are assets, these purchases, operating, and this particularly loan. Anytime I see interests in the trial balance, I always know that is interest paid. Is interest paid. And what I want to check immediately against that is the loan interest, the loan note itself, because interest will have been paid on a loan note. So in checking my trial balance, I always check that. I will check the loan, the interest. I will check the relative loan and check that, okay, did they match? Yeah, now I will just do 0.08 times 250. When I do 0.08 times 250, I saw that it was giving me 20. Because this 8% means that they're supposed to pay 8% of this 250 million per annum. But when I apply 8%, I should get the loan interest. So 20. So that immediately confirms something. Immediately confirms the fact that the interest to find here is the interest that is actually paid. The interest that's actually paid. That is really interest you find in the trial balance. So it is now left for you to then recognize the accrued interest. It is left for you to remember to recognize the accrued interest. Taught this when I taught you guys financial instruments, but I'll still revise it again. So I always check that to be safe. Then I look to another one I look at is this deferred tax. It's also a technical area in the sense that when you find deferred tax on the credit, it means opening. That's the opening deferred tax. Opening. That's the opening deferred tax liability. If it's on the debits, it's an opening deferred tax asset. So I've never seen a question where they give you deferred tax asset, but that doesn't mean they can't ask, but you mostly find deferred tax liability. So the requirement of the question wants us to solve statement of profit or loss and other comprehensive income, 10 marks. Statement of changes in equity, 6 marks. Statement of financial position, 14 marks. Okay. Then I go through my additional information. So the reality is this, I can decide to ignore this whole additional information. I can decide to ignore it. And I can prepare all of these statements using this trial balance. I need to balance. I hope you all agree with that. That I can ignore all of this additional information and prepare my statement, and it will definitely balance because this trial balance balanced. That being the case, means that whatever adjustments that you are making as a result of these additional items, you must ensure that you're able to identify the two items affected. You're able to identify that each adjustment you're making affects two items. Otherwise, your account will not balance. So try to identify the two correct items it will affect. So in teaching you those items affected, I will not teach you from the standpoint of saying debit this, credit this, because some of you are not good with that. And the examiner can fault you if you pass wrong journal. So I will teach you from the standpoint of increase and decrease, or deduct or add, something like that. I think that will help you to a large extent. And also, all of these items, they are, as we will read it, and you will see that there are just two categories. There are some that are just coming newly, meaning that we haven't entered it in the books at all. So they are new. So you need to enter them. And that means you need to pass two entries. Another category would be those that would affect figures here. Those that will change figures on the trial balance. Those also you need to ensure that it affects two items. Otherwise, your account will not balance. That goes to show that any student out of these 30 marks should be able to get at least 20. At least 20. Meaning that if there is any adjustment you don't know yet, leave it now. Usually, what will happen is that you are not adjusting anything and you are not bringing that particular item inside, but you will have gotten marks for the other ones you have brought into your statement. Just ensure that you prepare your statement. Now that we have set the background, now let's read this additional information. 1. This speaking to land and building that was purchased 15 years before the beginning of the period. He said the cost of the land is 350. And they said all land and building have been purchased by Concom Below since that date. I mean, Concom Below is the company we are preparing accounts for. So that's telling me that they purchased their land and building 15 years ago. And let me go to my trial balance to confirm that. This one 350. So they purchased this 15 years ago. And the cost of the land is 350. That means out of this one 350, building is 1 million. And they haven't really purchased any land and building after then. But on 1st of April, when is 1st of April? Is it the beginning or end? Okay, since the end of the year is March, that means 1st of April is the beginning. You will see that I asked that question. You must also ask that question in the exam. When they give you a date, you need to ask, is it the beginning or the end? Is it the beginning? You must always ask, is it the beginning or the end? Because if it's not the beginning, not the end, that means it's within the year. You have to be very careful because you might need to do some proration if need arise. I mean, I've established that this April 1st, 2022 is speaking to the beginning of the year. We're told that what happened then, they said this company had its land and building professionally valued at 400 million and 875 million respectively. And the directors wish to incorporate these figures into the financial statements. We're told that the estimated life of the building was originally 50 years, and the remaining life has not changed as a result of the valuation. So what they did here at the beginning of the year was to remeasure their land and building. That is, from whatever it was to these new amounts. That being the case, They said the building originally had 50 years. Considering that we bought it 15 years ago, that means the remaining life that has not changed is now 35 years, Abi. So we have 35 years remaining life. What is all this? What is it going to be useful for? I can tell you for sure that two things is involved here. The very first, taught you guys under year 16, those in VI, Mr. Ibrahim had taught you, that whenever there's a revaluation of an item of PPA, the first thing you identify is, are we having a revaluation surplus or deficit? As soon as you identify that, then you have a new value. And the second is for you to then know, okay, what's my depreciation for the year? So I can determine the carrying amount of this asset. That's all we need to do here. Secondly, they say later, the estate valuer, Mesa Ajasuko and company informed us, Coco Below PLC, that investment properties of the types owned by Coco Below had increased by 7.7%. The ended March 31st, 2023. This is telling me that my investment property that I have in my books that I just valued at the beginning of the year, that means this company is using fair value model for its investment property that was valued at 450 million. This guy is telling me that this estate valuer, he says that the value had increased by 7% at the end of the year, which is March 31st, 2023. This is end of the year. This then goes to show that I will need to update my investment property by increasing it by 7%. And to do that, I will need to recognize a fair value surplus. And fair value surplus arising from investment properties are recognized in POL. You learned that in IAS 40. I just taught my guys, my virtual class students, taught you guys last week. Thirdly, it said plant and machinery other than leased plant stated in 2 above, or 2 below, sorry, is depreciated at 15% per annum using reducing balance method. Depreciation of building, plant and machinery is charged to cost of service. This is quite straightforward. No acquisition, no revaluation, no disposal. It makes our life easy. All we need to do is just to calculate depreciation. And depreciation is calculated at 15%, reducing balance spaces. With this information, I then know also, because they said that plant and machinery other than lease plants is depreciated at 15% per annum using reducing balance method. And that also tells me that when I want to value this building, I need to use reducing balance method. And using reducing balance method, if you remember what I taught you guys, your depreciation will be calculated at 15% on the carrying amount, on the opening carrying amount. If they had told you that depreciation is calculated on costs using straight line method, that means it's going to be 15% on cost. Note 2. It says on 1st April 2022, Concom Below PLC entered into a lease for an item of plant that estimated life for 5 years. The lease period is also 5 years, with an annual rental of 110 million payable in advance from the beginning of the year. The plant is expected to have a new residual value at the end of its life. If purchased, the plant will have cost 460 million and be depreciated on a straight line basis. The interest rate implicit in the lease is 10%. I've taught my federal class student IFRS 16 on leases. I know fiscal class students haven't done it. But whenever we lease an asset, because Cocon below is the lessee now. I started teaching you guys anyway. Cocon below is the lessee. IFRS 16 says that the lessee must recognize the asset he has leased in his books and call it right of use asset. And he must also recognize a lease liability. So, and the way it's recognized is by getting the present value of the rent you are going to pay. You are going to present value it. This 460 million, I won't use it for anything. I won't use it for anything because IFRS 16 didn't mention that. It's just a confusion because some students will go and use it. They will not know. They will go and say, this is the cost of the asset. They will put that in the books. Whereas IFRS 16 says that you recognize the asset at the present value of the unpaid lease rentals. So you need to get the present value of all the unpaid lease rentals. And that will be the basis of the assets you recognize and also the lease liability you would recognize. And I will show you other things involved. This is completely ignored. Thirdly, I was told that the loan note was issued on July 1st, 2022 with the interest payable 6 monthly in arrears. So now they are telling me what I've already figured out, what I've already noted. Because I noted that the interest that they paid was lower than the interest that is due. The interest due is actually 20 million, 8% of 250. And I saw that the interest that was paid here was only 10. Now they are telling me the reason. Now they are telling me that the reason why they paid only 10 was because the loan note was issued during the year with interest payable monthly, 6 monthly in arrears. Therefore, if they issue the interest on July 1st, 2022, that means that this guy is expecting interest of how much? This is July, August, September, October, November, December. He will he will pay one in December, which is the one he has paid and they have recognized here. But that means the next one he will collect will be June. Abi? That's the next one he will not collect, pay. But accounting requires that you need to accrue for the interest. So, and the year end is when? The year end is March 31st, 2023. You need to accrue for the unpaid interest. You need to accrue for it, even though he has not paid, but we still need to accrue for it and recognize it in our books as a liability. We need to accrue for it. So I'll show you how you determine that. It's very straightforward. Note 4. They said the provision for income tax for the year to 31st March 2023 has been estimated at around 41.5 million. So this is the current tax for the year, which will be deducted from the PBT, and the other leg will be recognized as a liability. Additionally, I was told that the deferred tax provision at the end of the year is to be adjusted to a credit balance of 70.5 million. So this is the closing deferred tax. Remember, this part of the things I looked at. This deferred tax, I said, is the opening, the deferred tax at the beginning of the year. This is the deferred tax at the end of the year. In fact, this is my liability for that year. You see, the movement in the deferred tax, the increase in deferred tax in this case, that's what goes to P&L. That is what I would recognize in my books to P&L. I'll show you. And finally, I was told that the inventory as of March 31st, 2023 was valued at 206 million. So this is my closing inventory, which I will deduct from my cost of sales. And I'll also recognize as current.
Sorry, sir. Your audio is breaking up a bit. Maybe it's from my.
Okay, let me switch.
It's not breaking. It's not breaking. It's from your end.
Can you hear me?
Yes, I can.
Okay. So I have switched because of you. So it might be from my end, it might not be, it might be from your end, but I mean, I've not moved to my actual Wi-Fi. So these are all the information. You see, by the end,
I think another host has host him out.
I'm back, I'm back. You can hear me clearly, right?
Yes, sir.
Yes, sir.
Okay, I'm back. I was saying that at the end of this month, all things being equal, should have solved 4 or 5 questions with you guys. I'm sure of my virtual class student because we have done a lot. You guys have covered almost everything. But for the physical class, except if we do virtual, is not viable with the remaining 4 classes we have left for me to be able to do 4 questions for you guys. So need to agree on how we want to make that happen. It's always like that every diet for physical class students, anyways. So the first thing you do, is your workings. Don't, except if you read all of this and you believe you don't know how to adjust any of them, then you can go ahead and start preparing your statements. And you can easily walk away with almost 15/30, even ignoring all of this. But why should you now? Try it. An average student will get 20/30 in this part of in this question one. And ICAN exam time is of utmost importance. There is nothing your eyes needs to be set on the time. As soon as 50 minutes is on the dot, just move to another question. Otherwise, might not pass so. We are spending too much time on a question. That's why some people fail. Spread the time evenly all through. So when you have solved everything, then you can come back to the one you did not finish. Not saying you must finish one before you go to. No. So let's see. I can solve this maybe within 20 minutes, but since I'm teaching you, so to take me more time. So let me quickly address this first. When I read this, I was able to identify that what happened here was there was a revaluation of this land and building. So let me sort out that revaluation surplus or deficit first. Let me sort out that. So workings one, this is dealing with land and building. So the first thing I need to do is to determine the revaluation surplus or what? Or deficit on this land and building, which is determined by comparing the fair value of the land and building. Let me just sum it together. From the question, the land 400, the building 875. So what's 400 plus 875? That should be 1275, if I'm not mistaken. 400 plus 875. That's
You're
one two.
correct. 1275.
Okay, and please don't forget to put this millions. It's very, very important. Otherwise, you are wrong. Otherwise, this figure is wrong. We just write it, except if you want to write it in full like this, which is not advisable. If you just put this without this, you're wrong. And how did I know it's million? It's because of the way the trial balance is presented in millions. Even the additional information in millions. So that guides me. I'll compare that fair value with the carrying amount of the land and building, which is costs of the land and building, which I know is 1,350, minus the accumulated depreciation. A lot of students will flop here, especially the ones that forget that you don't depreciate land, that you only depreciate building. You don't depreciate land because land has an unlimited useful life. So you can't depreciate it. And that's the reason the question separated the cost of the land. So that you will know that the building, cost of the building is 1,350. 1,350. However, before I go on to do that, this is accumulated depreciation. We are not just buying this asset for the first time. So there will have been opening accumulated depreciation brought forward. The examiner did not disappoint. There was accumulated depreciation on the building brought forward of 300 million. Then I can do my depreciation charge for the year, which is the cost of the building, which is one billion, divided by the useful life of the building, this will not work. This is not going to work. I'm doing it like straight line method. I was told that depreciation is done on a reducing balance method. So that means depreciation will be computed on the opening carrying amount. So 1,350 divided by the accumulated depreciation, which is 1 million. So depreciation for the year is just how much? We are going to apply a rate of how much?
Sorry, sir. We have still not separated the land from the
Building, yeah. That's what I've seen. I thought I wanted to use. Okay, let's just separate it for them. How much was the land? The cost of the land is 350.
15 million, sir.
Yeah. And building is what?
One 1,000 million.
How much?
1,000 million.
The total was 1,350, Abi. Okay. Minus 350. That's
Yes.
1 billion. Which one is 1,000 million? Okay. So this 300 is relating to what? Building, Abi.
Yes.
Okay. So this is 750. No, let me. The carrying amount here is 350. Why here is how much? 400 or 700. So my depreciation for the year is just 15% on the carrying amount of the building, which is 700. So how much is that? What's 15% of 700?
$105. $105, sir.
105.
105. So now I can determine my carrying amount. So let's assume this is B. So this is 350. What's 700 minus 105? Is that 595? Let's assume this is A. Is this correct? 600, 595. Yeah.
Yeah.
Okay. So now I have my fair value and I have my carrying amount. Okay. So I can know whether I'm getting a revaluation surplus or a revaluation deficit. So I'm having evaluation surplus. For here is how much?
It's 50, sir.
Here is 50, and here is how much?
$280, sir.
280. So what's the total? Because I don't need to, there's no need separating. That's why I didn't want to. So just sum the two together. How much?
330.
330. So this is what I actually need. Do you have any questions? Any questions? No question. Okay. So there's something you guys were supposed to mention that you did not mention. That shows me something. Because these are the simple mistakes you would make in the exam, which I've just intentionally made here, and nobody spotted it. You see, this evaluation was done at the beginning of the year. This evaluation was done at the beginning of the year. But we are treating this evaluation as if it was done at the end of the year. See, by the fact that we deducted depreciation is done at the end of the year to get carrying amount before we got evaluation surplus makes this evaluation surplus wrong. We're supposed to do this evaluation surplus or deficits at the date when they bought the assets, which is at the date when they revalued, which is April 1st, 2022. So at that date, we would have charged this depreciation. So that makes it a little wrong for you. So at the beginning of the year, the carrying amount would actually be this of the assets. It would be this. Before you charge this depreciation in such a way that for the land and building, the total, as we have done before, was 1275. The carrying amount of the two assets, 350 plus 750, that's 1050. 1050. When you get the difference, your evaluation surplus through deficit should be the difference. So what is 1275 minus 1050? That will give us 225. That will give us 225. As
Yes,
against
sir.
this 330 that we computed. So you have to be very careful in the exam. You see that it's different. I've taught you guys this before, but it's been a while. IS 16, we have done this a while ago, so you might have forgotten, but be careful. When you want to get evaluation surplus or deficits, you need to know when are they doing the evaluation. If it's at the beginning of the year, get your evaluation surplus or deficit at the beginning of the year. At the beginning of the year. If your evaluation deficit or surplus is done at the end of the year, then this will have been right. That means, yes, we would calculate. The only difference is that you calculate depreciation for the year to get the carrying amount at the end of the year. It is now carrying amount at the end of the year, you now compare with the fair value to get surplus. But in this case, this surplus was determined at the beginning. You have to compare with the carrying amount at the beginning. Please be careful, because everything will now be wrong. Even your depreciation will be wrong. So that means our depreciation for the year is actually 15% on 875, because this is the new value of the building, not this anymore. It is now 875. So 875 million, what does that give me? What does that give me?
131.25.
131.
0.25.
131.25. Let's approximate 131. Since we're already doing level of rounding off. So let me just do 131. So this is my 131. In order to get my carrying amount for this year, the easiest way to do, you don't have to be doing all this separation. All this one is not necessary. Just extend this 131 here, because this is the total value of your assets, not these ones anymore, since they have revalued it at the beginning of the year to this. So just so if this is A, what's my carrying amount? If you put B here, so that when you are revising, you can trace it. This A minus B. Let's say that's your C. So my evaluation surplus, just this minus B. So what's my carrying amount? What's 1275 minus 131?
1144. 1144.
And that's the carrying amount of your land and building. So look at the way we carefully set it up. First, I determine my evaluation surplus or deficit by comparing this. And this separation made me know that this accumulated depreciation will only affect this guy. Even if I did separate it at this point, it won't affect anything. So I shall got my carrying amount. I got the difference between the two to get my revaluation surplus. So, and I did that before deducting the depreciation. Otherwise, I would have been wrong like the way we did it, because the evaluation was done at the beginning of the year. If the evaluation was at the beginning, if the evaluation was at the end of the year, maybe you will have been right the way we did it. If not, maybe you would have been right. So then we went ahead to do our depreciation for the year. Since the examiner told us that depreciation is 15% on reducing balance, no problem. As far as we are concerned now, this is the new value of the assets. We have not charged any depreciation. This is the first depreciation we are charging on this asset. That's why we can escape with this 875 to get 131. Then we remove this from the revalued amount of the assets to get our carrying amount. Then we are done with our workings. We are done with this. And secondly, they said later, the estate valuer, so they valued investment property and it increased by 7%. So my workings too, investment property. What was the opening fair value of the investment property? As given in the question, at the beginning was 450. Now, there is a fair value surplus, which is it increased by 7%. So what's 7% of 450?
$81.5. You can approximate to 32.
Okay. So that means the new value, the closing fair value of these assets is how much? It's 482. It's 482. And that's all for this one. And you need to know that this one will be recognized to your POL as income, as other income. Take it to POL. This plant and machinery, we only need to depreciate it. And we are depreciating it using reducing balance method. We are depreciating it using reducing balance method. In fact, I'm just reading this thing again. They said a plant and machinery other than lease plant is depreciated using reducing balance method. Depreciation of building plant and machinery is charged to cost of sales. Nothing states here that we should depreciate this building using reducing balance method. This 15% that we did will not fly. It should be, since we cannot assume it, if they are silent, we use straight line. So we'll divide it by 35 years. Since the remaining life of the building is 35, the building has 50 years life and we bought it 15 years ago, so remaining 35 years. So that
That's
15%,
25 million, sir, for the depreciation.
45? Okay, so 1275 minus 45 is how much? Is that correct?
The depreciation is 25. 875 divided by 35, that's 25.
Okay, so 25. So this would be 1250.
1250.
Okay. So let me put it in bracket for you. This is 1275 minus 25. It's 1250. So the third workings
Sir,
is,
sorry, sir. I don't know why you change it. Is it, you said
so I
key
just
and
read it
silent?
again. So I
Yes,
just read this thing again, that plant and machinery other than is to be depreciated at 15% per annum using reducing balance.
yes. They say you're using reducing balance.
Yes, now I'm going to depreciate building using reducing balance too.
And that's what they say we should use.
Where?
For the plant and machinery that we should use reducing balance.
Yes, now I said that we now want to use reducing balance for building too.
Oh, okay. Thank you, sir.
So it's cost. Since they gave us the useful life of the building, we should use costs or straight line method. So that was why I changed. So for the plant and machinery, let's depreciate using reducing balance. So what's the cost of the plant and machinery? At least you're learning a lot. Now I've done two methods. I've done reducing, I've done straight for even that one. So this 780 cost 780 less accumulated depreciation. How much would that be? Of the plants is 130. Have you seen it? Actually 130.
650. That's 650.
Let's see. Difference gives us 650. Then your depreciation charge for the year.
97.5, approximately 98.
So 15% times 650. That's 38, have you?
97.5,
97.5.
approximately 98.
Okay, 98. So my carrying amount, what's the difference?
552.
553. Okay. So note that the
552.
552.
is that correct?
Yes, 552.
It's correct now, 552.
552.
Okay. Okay. So note that the total depreciation of 98 plus, where is that one? 25. What's the addition of the two?
123.
123 should be charged to cost of sales. Should be charged cost of sales. How did I know that? Because the question told me that depreciation of building and plant should be charged to cost of sales. So Just they intentionally put them together, so I won't forget. Now, workings for. Now, speaking of this lease, so all I just need, anytime they mention lease, since I'm the lessee, I just need to compute right of use assets and lease liability. I need to compute right of use asset and lease liability. So my lease liability first, at the inception of the lease. When is the inception of the lease? On 1st April, which is good enough, is the beginning of the year. 1st April 2022. I will just get present value of unpaid lease rentals. And the examiner gave me the annual amount, and this amount is even payable in advance, meaning they have paid the first year amount. They have already paid that already. So, because it's payable in advance. So the liability now will be in respect of the remaining 4 years. The liability will be in respect of the remaining what? 4 years. So I'll need to discount that to present value. How do I do that? I'll use annuity, which is 1 minus 1 plus R. Plus R will be 1 point, what's the discount rate again? I forgot.
10%.
10%, 1.1 raised to power minus 4. 1 minus 1 plus R raised to power minus 4 over what? Over R. In this case, R is 0.1. So this gives me the discount factor. So whatever I get here, I'll multiply it by the annuity, which is 110 million. This annual amount I'm paying. So that gives me the present value. So if you punch your calculator and if you start with 1 plus 1.1 raised to power minus 4, you click equals, whatever you get, you do 1 minus answer, you click equals, divided by 0.1. So what does that annuity factor gives you?
3.17.
3.17. Multiply that by 110 million. What does it give?
348.7.
348.7. So let me just approximate to 349. Putting my millions here. That is my lease liability at the end of the year. However, I need to get my lease liability at the end of the year. So my lease liability at the reporting date, the way I taught you, I will do for March, which is the end of the year, March 2023. So the balance go forward. The opening value is how much? It's 349. Then, since the rent is paid in advance, if you remember what I taught you, for those that have learned it, you are going to have to add the interest before you deduct the rent, since the rent is paid in advance. So, in advance, sorry. If it's
But
paid in
what
advance,
the rent first, before calculating it.
Mingbo?
We remove the rent before calculating the interest.
Yes, Lukman, thank you. So here will be zero, because it has already been paid. We didn't include it as part of what we are owing here. So the lease rental we'll put here is zero because it has already been paid. So we didn't consider it as part of our liability. So that means the balance is 349. Now we can add finance costs at the rate of 10%. So which will be 3 point what? 3.5. So I approximate that to 3.5.
10% of 349.
So what's the balance carried forward?
Sorry, the finance cost, is it not 10% of 349?
Yes, yes,
That should be 35.
35. So 349 plus 35 is what? It's 38 what? 4.
Yeah,
Yeah.
386.
Okay. Now we can't stop here because for lease liability, you will need to separate that lease liability into current and non-current. Because this 384, which is the liability at the end of the year, there's a portion of it that will be paid next year. If you remember, there's a portion of it that will be paid next year, and we can project that, we can model that here. So just to ensure that you would be able to separate it into current and non-current, you have to then do the second year as well. So, and for this second year, our rent is how much? 110, giving us a balance of how much? 274. And our finance costs is how much? 27. Our balance is how much?
301.
201. So now, when we are doing our account in 2023, this 384, how much of it is current? How much of it is non-current? Can anyone remember?
To separate 2023 from 2024. We deduct
Okay, so that'll give you how much?
Yeah, 23.
How much now? Look, man, and you went quiet.
83.
So that 83 is what? Is it current or non-current?
83 is the current.
83 is the current. What is now the non-current?
Current is the next year.
301.
Okay, fine. Okay, good. You guys, your head is there, so you still remember everything we taught you. Fine. So we need to separate this 384 into current and non-current. Since we can see that the liability fell from 384 to 3001 by 83, that goes to show that the current portion of this 384 is 83, because that means we're going to pay 83 next year. That was why the liability came down to 301. So if out of 384, we're going to pay 83 next year, which is the current, that means the balance is the non-current, which will always be the next year balance. Which will always be the next year balance. Or you can just do your 384 minus 83. You still get the correct answer. So I've done projecting the lease liability. And this finance cost will go to PLL. This finance cost will go to PLL. Okay, I can see one hand raised up. Can you?
Yes, sir. Good evening, sir. Please, for the sake of the physical class student, kindly explain the current and the non-current.
I thought I just explained it. I said this 384, this liability, a portion of it is current, which was why we did this second year. So, and we can see that this 384 reduced to 301 in next year. That means we will have settled the difference. That was why it reduced. And the liability you will settle, so as far as 2023 is concerned, we are settling 83 next year. That 83, out of this 384, we'll treat it as a current liability. So here now, the current portion here is 384 minus 301, which is 83. And the non-current portion is 301. Which can just say 384 minus the current portion. So the balance is 301 or the non-current. So that's the lease liability. For the right of use assets, which is the assets the lessee will recognize as well. First, it recognizes the asset at cost. So at the inception of the lease, which is the beginning of the year, it will first recognize the PV of unpaid lease rentals as the same amount that you recognize as liability, which is this 349, Then you will add amounts paid at the commencement date, which is 110, because they told us that he paid 110 in advance. He paid 110 in advance. So amount paid at commencement date is 110. So the total, and let me just set this up for you like the way I set it up. And you also add any initial direct costs and any decommissioning costs. In this case is zero here. So the cost of this right of use asset at the beginning of the year is 459. And at the end of the year, which is 31st March 2023, we'll calculate our depreciation for the year, which is the cost of the assets divided by the lease term. Okay. And in this case, the cost of the asset is this 459. So we have 459 divided by the lease term, which is 5 years. If you punch your calculator, what would that come to?
$91.8.
1892 approximately.
92.
92. And this is where I got the 5 years from. They told me that the lease term is 5 years. The useful life is 5 years, but actually, you need to use the lease term. You need to use the lease term. Now, having determined that, what's the carrying amount of these assets? So what's 459 minus 92?
Femi. Fún wọn lówó jọ nítorí náà.
How much is it?
Nọ́mbà ò
What's
367.
367.
367? And that's the carrying amount of my right of use assets. And that's the workings for this. That's the workings for this. So I know from these my workings now, what goes to P&L are these finance costs. I know they are going to P&L. Taking them to P&L. My liability, 83 is current
Sir,
liability.
sorry, the
One.
finance cost, is it the 35 and 27 or just 35 alone?
35 alone. It's just 35 alone for the year, not the 2 years. Good observation. Then, for my right of use, this depreciation of 92, don't let us forget to take it to, is it cost of sales? Yeah, it's charged to cost of sales. You need to add it to cost of sales. You need to add it to cost of sales. And this will go to my statement of financial position as a lease, as right of use asset. Okay. Now, okay, Lola wants to ask a question. Go ahead, please. Yes, please, go ahead.
Good evening, sir. Good evening, everyone. So, for the list, I did not get the unpaid, the preview of unpaid list. The 349. Yes, I didn't get that.
Okay, if it's this one you're talking about, we just did annuity factor, we multiplied it by 110, and that was what gave us this 349.
Okay, so
Yeah.
I have a question.
Okay, Badmos.
I would like to know the right of use of assets. Is it applicable to only lessor or both lessee and lessee?
This is only applicable to lessee. For lessor, it's a different thing entirely.
So if the company that was calculating all this account to the lessee, then we have to calculate the that's right.
No, if the company if you are preparing this account for a lessee, so this is what we will do. If you are doing it for a lessor, what you do is different. I'll teach you that when we see in the next class. I've already taught the other guys, but it will be different from this. Okay. Now the next workings. They said the loan note was issued on 1st July with interest payable 6 months in arrears. So I just need to determine my workings 5. That interest on loan notes. So the interest due or the interest payable on loan notes.
I think it's receivable.
Which one is receivable?
The one that I issue. Yeah, the one that I issue.
Yeah, the one that issue what? I don't understand. Lukman, talk now.
I've seen that. I thought is the Conco below that issued the
Yeah, it was one that issued it now. It's on credit, it's liability, it's a financial liability. That's why it's the one paying interest. It's the one that issued. They didn't purchase it, he issued. So the interest payable is 8% of 250. 8% times 250. However, we issued this loan note in July. Abi? Yes, no, July. If you count from July till the end of the year, which is March, that's how many months?
6 months.
9 months.
That's very good.
That's 9
9
months.
months.
Okay, 9 months. So that would be times 9/12. That's the interest payable. So how much did that give us? How much would that give you?
15.
15. So this interest payable is what you recognize to your P&L as a finance costs. This is what goes to your P&L, the interest payable for the year. But in the trial balance, we saw that we already paid the 6 months portion, which is 10. We have paid 10. So that means there's an accrued interest. There's an accrued interest of 5 that I'll recognize as a current liability in my books. There's an accrued interest of 5. And setting up this in millions. So that's for that interest on loan. Then provisions. So there's a current tax of 141.5 million. So let me set up my income tax. There's a current tax expense of 141.5. And I need to also establish my deferred tax expense, which let me call it 6B. So my deferred tax expense is usually the difference between the opening balance, opening deferred tax, liability, which is in the trial balance of 62, which is the trial balance of 62, and my closing deferred tax liability, which they will give me the additional information. They give me 70.5. So my deferred tax expense, which is represented by increase in deferred tax liability, because when your liability should increase, you better mute yourself, boss. Increase in deferred tax liability. So what's the difference?
8.5.
8.5. You know that it could be a decrease. If it's decrease, it's not going to be expense, it will be income. It will be a deduction from here. So I will add it to my income tax. So what's the addition of these two?
150.
150. So this is how you set it up. And finally, I was given my closing inventory of how much? 206 million. 216 million. $160 million. Now, I'm done with all my workings, but in order to even make my life easier, there are some things I need to actually settle. There are some things I need to set up already, which is my cost of sales. I need to put it together so that it should not become a nuisance for me. As per my trial balance, I was not given cost of sales directly. I was given purchases. I was given opening inventory. I was not given returns, no carriage inward. So, I need to work it out. So, my opening inventory, what was my opening inventory? 189. I'll add my purchases. How much is my purchases? It's 391. Purchases 391. Since I don't have any returns outward or inward, then this becomes my cost of goods available for sale, which is this 570?
580.
580. So I can then deduct my closing inventory from working 7, which is 216. So what does this give you?
$364.
361. Then you,
3644.
okay,
364.
okay. Then you add depreciation on ROU, right of use assets, from workings 4. This one, this is 92. That goes to cost of sales. Then you also add depreciation of building and plants from, I think, workings 2. Yeah, I noted it here. Workings 3, 123. So if I add all this together, what's my cost of sales?
579.
579. So I've done my cost of sales. Also, my finance costs, there are two finance costs here that I need to put together just to make my life easier later. So finance costs, I will have the interest payable on loan notes from workings 5, this 15. Interest payables on loan notes, workings 5, 15, and also my lease interests from workings 4. My lease interest from workings 4, which is this 35. So if I add the two together, it gives me 50. Gives me 50. So I think I've put some things together, and I can see here I have operating expenses. There's nothing much to it. So, and I have income from this other income. So let me put my other income also together, because there are more than one items. My other operating income. So I have income from investment property for my trial balance. This one. This 23. And also, I have a fair value surplus of 32 here. Those are the only other income that I have. This revaluation surplus will go to OCI, so it's not coming here. And I don't have any other income here, judging from these entries in the trial balance. So I've set up myself for an easy ride. What's the total? This 55. Now, go below PLC, statement of profit or loss, and other comprehensive income for the year ended 31st March 2023. So I start with my revenue for my trial balance. My revenue for my trial balance is 1392. And I want to check, do I have any returns inwards? No, I don't. I don't have any return inwards here. So it's a free guy, no deductions. So 1392. I deduct my cost of sales, which I did from, I guess, working 8, if I'm correct. Yes. And is 579. Then that gives me my gross profits, So what's my gross profit?
Eight one three. 813.
813. Okay. Then my operating expenses for my balance.
Sorry, I just want to ask, shouldn't the other operating income come with the gross profit?
I can't hear you. I didn't hear you.
I said, shouldn't the other operating income come before the operating expenses?
Doesn't matter. So then my other operating income, which is 10, which is 50. Yeah, working 10, that's 55. Then I will have my operating profit. So what's my operating profit?
792.
790.
Are you sure? Are you sure it's 790?
Yes, sir.
Yeah.
813 minus 78 plus 55.
Okay. Then I'll have my finance costs from workings 9, which is how much? Which is 50. Then that gives me my profit before tax of 740. I mean, provided I don't have finance income, and judging from these credits, don't have any finance income. So I'll do my income tax expense, which was working 6, and is 8.5. Like the fact that when I was made this post, I got that information given. Okay. Then profit for the year. So how much is the profit for the year?
731.5. You can see 732 approximately.
Okay.
Sorry, sir. What of the income tax, the current income tax of 141.5?
Yeah, sorry. What did you say?
I said the income tax of 141.5.
Oh, that's true. Is this 150 you should pick? The addition of the two. That was why we set up these workings, not just this one alone. So is this 150 that we should pick? So how much is this?
590.
590.
590.
590. Okay. Okay. So what's my evaluation surplus from workings 1? Two to five.
225.
Five. So what's my total comprehensive income?
815.
815. So I'm done with this. Then the second thing they want us to do is statement of changes in equity. Okay. So I'll need to set this up based on the equity items that I have. I have ordinary shares, retained earnings. I don't have any share premium, and I've also computed evaluation surplus. So those are the only 3 items that will be in my equity. So share capital, retained earnings, evaluation surplus, then total. So balance brought forward. Balance at the beginning are figures for my trial balance. This is 750. This is 598. So 750, 598. This is 0. What's the addition of these two? 750 plus 598.
134.
1348.
Then I will have profit for the year. I'll have profit for the year, which is this 590. Profit for the year 590. This is 590. Then I'll have evaluation surplus. This is 225. Then I'll have dividend paid from the trial balance, which is 75. So what are we looking at?
2088.
How much is this?
113.
Sorry?
113.
I can't hear you.
188.
Okay.
Nobody is not speaking up. Another person is calling wrong figure.
1188.
1188. Okay.
One that you wrote 113 is 1188. The total is 2088.
It's not 1188 now. This plus this minus this is not 1188.
It's 1113, yeah, correct.
Okay.
It's correct.
750 plus 225.
So that last one is 208.
2088. Okay. Then for our assets, my land and building is 1250 from workings 1. Then my plant and machinery is 552 from workings 3. Then my right of use assets from workings 4 is 367. Then my investment property from workings 2 is 482. So what's the total of everything?
Two six five one.
Then my current assets for my trial balance, I think I have only my closing inventory because I don't have any current assets here from what I'm looking at here. It's only this one that will come in as a current assets, inventory of 216.
But I saw trade receivable.
Okay, let's check. Okay, yeah, that's true. Trade receivables 266. So what's the addition of these two? That would be
482.
482. So add this 482 to this 2651.
3133.
3123.
No, 3133.
Okay, 3133. Then equity and liabilities. What is my equity? Now I have my ordinary share capital, which is 750. I have my retained earnings, which is 1113. I have my valuation surplus, which is 225. And I got the total as 2088. Then I have my current liabilities, which is that loan notes, the trial balance of 250. Loan notes in the trial balance of 250. There's that deferred tax at the end of the year, which is the closing deferred tax of 70.5. Closing deferred tax of 70.5. Let's put 71 since we have been approximating everything. So this will give me 321. Then my current liabilities.
Sir, what of the lease liability, the non-current one of 301?
Yeah, thank you. Now it's under workings for the non-current portion of the lease liability. So add 301 to this. That's 622, Abby.
Yes.
So I won't forget this one too. And this is 83. All these are from workings for. Okay. So let me go back for my current liabilities. My trade payables and overdrafts. Trade payables 167, overdraft 27. Trade payables 167. Bank overdrafts 27. Okay. Are there any other items? Yes. We have, if I check my workings, I've included this list liability. We have
You
this
have
interest of 5.
We also have current tax expense.
That should be workings 5 or so. And we have the current tax liabilities also, which is I think working 6. Was it 141.5 or so?
Yes, sir, 141.5.
So just approximate it to 142. This one. Okay. Which other one? I'm not sure there's any other one. So let's sum it together. Add 83
424.
1 to what?
424.
124.
424.
424.
Okay, thank you. Yeah, add it to 622 and 208.
I have 3134. I think approximation is yes.
3134. Okay.
Okay, so let's audit for let's so you guys should just take your time, look through this solution. I will share the solution with you. This entire working notes, I'll share it with you. And this is where we'll continue all the questions we'll be solving unpublished. This is how we're going to continue. And I don't know, for you guys at Physical Center at VI, you have to be ready to make some sacrifices. Otherwise, you will not cover up in terms of how far you guys have gone, because you guys have not, we have not finished lease, we have not finished income tax. And income tax will might take up to 2 weeks. Lease, the whole of next week. So I would communicate my plans with you so that at least we would have time to solve the targeted number of published that we're supposed to solve, which is 4 or 5, so that you get used to all of these things. These things need a lot of practice, get used to. As I'm solving it, you go and solve it yourself. Because it's your question 1, and you need to, and look at the way it's methodical. You need to understand the question, know where your figures are, then navigate to it, right? So what I would teach you guys in class would be maybe statement of cash flows. For these other guys online, the next topic, we are about rounding up group. I think tomorrow or so we'll round up. Then their next topic is statement of cash flows and few other items left for them. So thank you very much. I will share the working notes with you, and I would see we're going to be meeting tomorrow for 10 guys, virtual students. We're going to be doing 10 to 12 to round up on group tomorrow morning. If there's anything left, we'll probably do it. I don't know whether there will be an evening class, I'm not sure, but I'll let you know as we move on tomorrow. Thank you very much. Have a wonderful evening.
Yes, like this question we solve now, how many minutes I used to solve it during the exam? 50 minutes.
Yes, 50 minutes.
2 hours. We used to have to
I
solve
also
it.
have something to look at the time it takes her to work. You said the
That's
person
what
that is
I'm
not do working can get like maybe
But
15 or 20. Now look at
Yes,
the time
how
don't
is it
include us.
possible?
Don't include us. Don't include me and you. If I was doing it alone, give me figure. You didn't give me figure early.
I know. You know, in the exam too, we'll be remembering how you started.
Give me figure.
Yeah,
If what you can do is if you can solve it like maybe 2 times, you solve it once, see how long it take you just to practice, then sit down and solve it again when you are used to it. It will not take you more than 50 minutes, seriously, if you know what you're doing. Because I've actually solved it in writing, sat down to solve it myself. It took me around maybe 25 minutes or thereabout. Because if nobody is calling figure, you're not waiting for anybody, you're pressing your calculator, you're moving. It should not take you so long. And it takes a lot of getting used to it. It takes a lot of getting used to it. But I mean, we are starting early, so we still have 3 weeks, so we can still solve 3 more. So you'll be solving at least one every week from now, one every week. And the same thing for cash flow too. You need to, that one to has a lot of getting used to. So this one and cash flow. And just you need to practice them as overly as many times as possible. All right, guys.
So,
Take care of yourself. Bye.
you too. No rest. Don't